Welcome to Trading Lounge and the US indices. We'll probably be looking at a few stocks today as well with this. So just on the weekly chart here, we're looking at from primary wave 4 here to primary wave 5 here. Other Elliott people may have this particular primary wave 5 here as an intermediate wave 5 here. So not that it matters. It's more important, I guess, in being able to count to 5 in terms of 1 and 2 and 3, and we're in wave 4 here, and we're moving up to wave 5 here. When will this top here occur? Well, that will just depend on how long wave 4 takes, because if wave 2 is simple, then wave 4 can be complex. I've just done it here as an A and a B and a C wave here, and I think that's correct. So it just depends on how long this takes within here. So this little leg up here should be easier to understand, because normally if the extension is in wave 3 here, then we can look at wave 1 and wave 5 here being roughly the same amplitude. So in terms of time, it will be basically the same. So you can count these weeks here. So maybe there's 11 weeks there, say 12 weeks, so 3 months. So that would, if we gave this a little bit more time into the end of March, February, March, April, May, June, so sort of mid-year we could be looking at this sort of top here, but it just depends how this plays out here. This particular move down through here has been sort of interesting. If we have a look at a couple of stocks, for instance, this is Berkshire Hathaway here. So it's it's one of the biggest stocks at $300,000 for a share. So on a 4-hour chart, so we can see. The interesting thing about this is we can see that it's got 1, 2, 3, 4, 5 here, nice and clear here. Okay, so because it had 5 waves here, then we could look at it, retracing back up to its 50-60% mark, which it is there now. I won't draw it in, but 61.8. So it certainly can have, in this particular instance here, I can see, without pulling it apart, I can see we've got an impulse wave up here, and the pullback. So I can see 1 and 2 and 3 and 4. So we may even have, and this might go for the US stocks as US markets as the other US market, is one more little push up here before we see wave C come down in roughly the same time and length. Probably just not as sharp. Normally wave C is a little bit like this here. But it's interesting that this move down through here, in some stocks that's been the same. So if I have a look at Google here for a moment, well, Alphabet, and this is a 4-hour chart as well, we can also see that it had its swift move down through here. It's back at its 61.8% mark here, as an A and a B and a C wave here. So that might move over. But the other one would be that you'll see in the markets is that the move down, don't worry about the labeling here too much, but the move down through here, you can see that it's not a very nice 5-wave structure. It's more like an A wave, a B wave, and a C wave, or rather an A and a B. An A wave to here, a B wave to here, and a C wave to here. So an A, then an A and a B and a C wave to here for the B wave. So we've been getting different patterns down here, but I think that this one here for Amazon has always been that, I mean, it's one of the strongest stocks, so it will have that little move up there, and this is what we need to look out for here at the moment, because this little move here, that can be the top, or it can just be up for 1, back for 2, and then 3, 4, and 5 here, topping out here, and then moving down here. So in most cases, we can look for shorting opportunities below the previous low here in these cases. So yeah, just a bit of a look around. The banks too, this is Morgan's here on a 4-hour chart, JP Morgan's, and we can see that its pattern coming down here is completely different as well here. So we could start to look for, I can see that we could look at this one, well, there's different ways to view it, but it does appear that we've got 5 waves here. So it does appear that we would need to look at this as the A, the B, and the C wave here for the A wave. And then the B wave up here, I can see we've got 1 and 2 here, and then 1 and 2 and 3 and 4 and 5 here. So, we can look to short this under here. We need a clear breach of that here. Yes, it can also move up through here as well, so you could take that long position there as well. I don't have the volume on this one here, but that's something that you can bring into play on stocks here. So, yeah, coming back to the S&P here, and just going into this now onto the daily chart here. So, yeah, it's a time to be very sort of cautious here. So the reality is, looking at some of the stocks, it's possible to get another little push up here. But at the same time, we need to prepare to go short here as well. I mean, in this case here, of course, we can move this to the 2700 here. That's the closest, largest number. So we could say to ourselves, well, if the 2700 became the retested resistance, then we could look to short from that point, and that would play out as the market came down to the 2700. There would be some sort of bounce here, and then if it was going to move through, it would move through, and then it will come back and check it. And then that's where the short trade goes. This is what I call the safe trade. And if the retest fails here and moves down, well, then you know that you're on the right side, because it's been rejected at that point. That's why it's safer, because the 2700 has built up the supply, the sellers at that point, and we can move down from that point. So moving in here, 4-hour chart, and it's going to tell us anything different. So, I mean, that's what we were looking for here, weren't we? We were looking for an A and a B, and then looking for a C wave up here. The last little structure up here, the wave 5, is a little bit dodgy, and it's possible for this to push up through here. As I mentioned before, the 2700 is important. I would have also mentioned the 2720 in here as a point that we could look to build in short positions here, the 72 number. Bit of an odd thing, but yeah. So look, basically in a nutshell, we've got our 5 waves down here, and we know that different stocks are, different markets have got different patterns coming down through here. Some of these look like an A and a B and a C wave to this point here. Like the Amazon, and I mean, at the end of the day as well, it could be possible that if I've made a mistake of this totally, then all of this can be the A wave down to here. This can be the B wave in here, and then the C wave in here as well. So that's quite possible, but I haven't done that because when I look at like Berkshire Hathaway here, we can see we've got 1, 2, 3, 4, and 5 here. So it's a very clear impulse wave here. So we're looking for that retracement and then down from that way again. So this is why partly that we've gone in that direction, but anyway, I think it's just good to talk about these things, isn't it? Just to sort of shoot the breeze on them and throw them around, and anybody's welcome to make a comment, with their analysis in the social section, or email me and so on. So this is where we are. So we know that it's possible for the market to go up. So if we pretty much looked at strategy now, if we go to a 1-hour chart here, So it's doing all the right things. We've had this here, as you know, on our charts as 1 and 2 and 3 and 4 and 5 here. It's a bit of a long shot squeezing that in, but it's more. It's like it's an ending pattern here, isn't it? It's fitting it all the structures in. And wave 3 is not the shortest here. Wave 5 would be here, so that's okay. But what I'm sort of thinking is that we just need to be a little bit mindful. Is that this could be like a little wave 4 pulling back from this point here to the 38.2% retracement level where it is now, and then move, whoops daisy, and then move up from that point here, oops, and move up from that 38.2%, basically where it is now. So we could say that if that was going to be the case, we could take a long trade above here. I'll just put that in green here just so we can clarify that a little bit. And so that really takes care of the problem of being wrong, doesn't it, in that sense. So I think that's good. So obviously the structure, if we're going to be moving down here, then if this is 5 waves here, I don't know, I have to look at that, but there may be another little move down here into the 27, but then there would be a little A, B, and C here coming back off this, and then the move through here, then the retest, and then down from that point here. So really, we could look to be short. You could go short if you understood that this was a corrective rally here, then you could go short under here. You could go short under here, and also too when the 72 here, the 2672 becomes the resistance. You can go short here as well. So you can build in terms of safety in this area. You may already be short on the turn, and that's obviously the turn is where the money is, but that's where the risk is as well. So moving in a little bit closer here. I was just looking at, I've just got to put this on 1000 to squash it all in. This is the this platform that I use here as well is the French company, the ProRealTime.com, but the data is very expensive to buy from those guys. They've got a free end of day platform, which is nice, but the data can get very expensive. So this one here is through IG Markets. Yeah, I think it's a really nice platform, and I've known about it since the year 2000 or even a bit earlier. Yeah, I mean, it's a great charting program. I like it, and we don't get money for sending you to IG Markets either. And I'm not saying that they're the best ones either. It just depends on what you're doing. I mean, if I was trading, I mean, obviously, if you're trading indices here, you're looking for full contracts or mini contracts. It makes it kind of easier. It's much expensive. It's very expensive with the brokerage here. It's much cheaper with using futures contracts, but the margin's much higher, so it's not for everybody. If I was scalping Forex, for instance, I would be using, I'd definitely be using an ECN platform. And I wouldn't be paying for the spread, because with a lot of companies, you're far better off with Forex if you're paying the brokerage. So your brokerage is X amount of dollars for every trade that you do, and then that way they've got no reason to play around with the spread, because a lot of these platforms, like the MT4 platform, which is a Russian platform, which is a great, robust platform, I call it the AK-47s of trading, because those guns you can chuck in the water, in the sand and desert, and pull them out and still use them again. So the MT4 is really quite sort of reliable C# based platform, but what people don't realize is that the brokeraging companies have got like a manager behind that, where they can control the spread at certain times through when news articles come out, and they can set the spread, and they can set the manager up that you can't see for each individual client depending on how you trade. So yeah, it's much better to go through an ECN platform and pay the brokerage, so then you know where you are. Then they don't have any they don't have any need to get into extra slippage in various ways, so to speak. So if I was trading forex, I go for the ECN, and I would have my brokerage cost actually set, not based on the spread. Okay, anyway, it's enough rambling on about that. So from this top of this B wave here, it looks like we've got 1 and 2 and 3 and 4, high 4 down to 5 here for wave 1, ABC for 2, 3, 4 and 5 here. So in a way, it's possible that we've got wave 1 here. It still might be an A wave here and a B wave here and 5 waves down for the C wave here. So, but it is displaying that we're getting 3 waves to the upsides here, yeah, and we're getting 5 waves coming to the downside each time. So basically, what that's telling us in Elliott terms is it's pointing in the direction that it's going. So it's pointing down, 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 and down, and this is confirming these 3 wave structures to the upside are saying that, oh, this is a trend that's actually moving down. It may not move. It may only go to the 2700 and then move up from there, because here I was counting 5 waves down for 1 and 2, and then 5 waves down here for 3, back for 4, coming down for 5. So I was thinking that we could expect, I can't draw on this side of the tick chart, but basically 5 waves to come down here somewhere, and then basically an A wave bounce, a B wave, and a C wave here, coming back up to the 272 number here, and yeah, down. So if you're going to put a stop here, for instance, if I can put like if I was going to go short now, for instance, right, and I wanted to get through the 2700 here, then I need to be above the 61.8% at this particular point. So the stop would have to go here. You could probably refine that and get it better. I'm just doing it in a rough way. So that would keep you safe, but obviously there's quite a few points between all of that and that, and it just depends, if you're in for the trend, because wait for that to save. I mean, at the end of the day, if this is correct, then the length of wave C should be roughly the length of this structure here. So we can look down to the 2500. So mucking around here is not such a big deal. Do you know what I mean? It's going to cost, but in relationship to the reward, it's doable. The only problem here that we know is that we're actually trading against the trend here. So the safe bet here is the 2700 as a retested resistance for the short trade. And yeah, that's that. All right, I think that's all I needed to waffle on about there. So cheers. Thanks for tuning in.